Do you know what is Forex? In this video, I will discuss all about Forex trade. Forex trading is a term used to describe individuals that are engaged in the active exchange of foreign currencies, often for the purpose of financial benefit or gain. That can take on the form of speculators, who are looking to buy or sell a currency with the goal of profiting from the currency's price movement. Or it can be a hedger that's looking to protect their accounts in the event of an adverse move against their own currency positions. The foreign exchange market, or Forex, FX for short, is a decentralized marketplace that facilitates the buying and selling of different currencies. This takes place over the counter instead of on a centralized exchange. Without knowing it, you have probably already participated in the foreign exchange market by ordering imported products such as clothing or shoes, or, more obviously, buying foreign currency when on vacation. Traders may be drawn to Forex for several reasons, including the size of the FX market, a wide variety of currencies to trade, differing levels of volatility, low transaction costs, 24 hours a day trading during the week. One unique aspect of the Forex market is the manner in which prices are quoted. Because currencies are the base of the financial system, the only way to quote a currency is by using other currencies. This creates a relative valuation metric that may sound confusing at first, but can become more normalized the longer that one works with this two-sided convention. The foreign exchange market works like many other markets in that it's driven by supply and demand. Using a very basic example, if there is a strong demand for the US dollar from European citizens holding euros, they will exchange their euros into dollars. The value of the US dollar will rise while the value of the euro will fall. Keep in mind that this transaction only affects the EU, or US currency pair, and will not, for example, cause the US dollar to depreciate against the Japanese yen. This is very similar to other markets. If you think the value of a currency is going to go up, appreciate, you can look to buy the currency. This is known as going long. If you feel the currency is going to go down, depreciate, you sell that currency. This is known as going short. There are essentially two types of traders in the foreign exchange market: hedgers and speculators. Hedgers are always looking to avoid extreme movements in the exchange rate. Think of big conglomerates like Exxon and how they look to reduce their exposure to foreign currency movements. For more in-depth analysis and exclusive content, visit our website at financialmarkets.online. Don't forget to like this video, subscribe to our channel, and hit the notification bell to stay updated on the latest financial trends.